Good morning, everybody. Mike Vacchi here for PrincetonTrader.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES, and what we saw yesterday is we saw a move up to new highs, 1565, and then we had a nice little down move. But just as we've seen in down moves, for the past 10 sessions or so, the middle Bollinger Band, the 20-day simple moving average, remains support. Yesterday, it didn't even really get challenged. We got down to that critical 1553 area, and we were able to bounce off of that pretty nicely. And we're seeing some follow through this morning. We're trading 1561.75. We traded as high as 1563.75. So my thesis with respect to this market hasn't really changed at all. I'm looking at 1568 to 1572 for a breach of this upper Bollinger Band and a move through. And I think at that point, up in the 72 area, that is a much more risk-averse way to get swing short this market. The risk that I'm taking as a trader is that we just go ahead and have one of these little touches of the upper Bollinger Band be the end, and we drop like a rock. If that happens, you know what? That's okay. That's not a normal setup. It's an abnormal setup, and sometimes you're going to miss things as a trader. The risk in being in that trade is a lot worse than the opportunity cost of being out. The reason I say that is because the middle band here has been such good support. From a technical analysis perspective, it is very difficult to see how we breach the middle band without going up to retest this area as resistance. That retest of the area as resistance is an area where I would want to get short, because then my risk is defined. Once the bears get down below that middle band, they're going to have to close below it. They're going to have to follow through. They're going to have to put some work in. They're going to have to put in a couple of red days in a row. We haven't seen 2 red days in a row since February 20 and February 21st. That's over a month. I was telling my subscribers last night that today has the potential to be another red day. I know we're up right now. I think we have the potential to see a pop off the open that gets sold. If the bears can get below 53, they can go to work on 49 and 47. There's a lot of catalysts this week. Tomorrow morning is the ADP report. As we head into jobs later in the week. We have factory orders today at 10 o'clock. You got the ECB that'll be doing a press conference on Thursday along with their interest rate announcement. So there are some catalysts this week that can move things. And if they're going to walk it up into jobs, they need to pull it back first. So I'm looking for weakness today. Yeah, I know we're up 6 handles, but I'm looking for weakness today. If we get through 65 and up into 68, 72 today, then I'll start to initiate some swing shorts. So not a lot of answers today. A lot of questions. We continue to linger here. The only thing that we do know is that the middle band is support. And that 53 held up. And we know that until the bears can make a lower low versus the previous day's low, there really isn't much to talk about. Okay? They did it here, but they blew it. And they're back to having the low of the day steadily climb. Okay? So, that's what I'm looking at. Pivot-wise, we've got the daily pivot coming in around 1558, 3-dayer 1555 half, and the 9-dayer down at 1551. I would expect to see daily pivot today at some point. If we don't challenge the daily pivot, that is very indicative that we are going to have a strong day. If we get below 1558 daily pivot and can convert that as resistance, that's indicative of the bears' ability to go to work on 1556 and 1553. 1553 remains a very big deal. It's acting as a point of control right now. Okay, everybody have a fantastic day. Mike Vacchi for PrincetonTrader.com. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.